the third dimension. Instead of just flat text, imagine 3D objects being made by collecting material layer by layer by layer. It uses all kinds of materials, including plastics, metals, ceramics.
Good morning. You're watching All You Need to Know on BloombergQuint Live, India's first digital live streaming business news service. I am Agam Vakil. First, the headlines. The World Health Organization says there is no threat to declare the coronavirus outbreak as a pandemic as yet, even as Iran and South Korea continue to report more deaths. The United States, too, reported its first death on Sunday. India's third quarter GDP grows 4.7% in line with expectations. The second quarter numbers were revised to 5.1%. GST collections for the month of January stood at 1.05 lakh crores. Collections have crossed the 1 lakh crore mark for the fourth straight month. Mahindra & Mahindra reports a 42% drop in its overall auto sales for the month of February. Maruti Suzuki too reports a 1.1% drop in its overall sales, attributing it to subdued domestic consumption. And the initial public offer of SBI cards and payment services opens for subscription today. The price band for the same is between 750 to 755 rupees per share. Now, the coronavirus fears rattled U.S. markets in the week gone by, where benchmark indices saw their worst week since the global financial crisis in 2008. The S&P 500 fell 11% in the last 1 week. Oil prices, too, saw its biggest weekly loss since 2008. Our team of reporters, Abigail Doolittle, Ritika Gupta, and Renita Young, brings us a wrap of all the Friday's trading session in this report.
Let's take a look at the week that was for the S&P 500, also that close. If we take a look at a 5-day chart, there it is, down 11.5%, the worst week since 2008. As for that small move higher toward the close, really ameliorating the losses, Matt Rao of Headwaters Volatility, he said watch after 350 because that's when corporate buybacks can happen. If corporations step in, it could be an encouraging sign. So that could be why we saw that much better close than expected. But when we put it into the context of a longer-term weekly chart, because of course the S&P 500 absolutely sliced through its 200-day moving average, so we have to look at the weekly chart. Here is in pink the 40-week moving average, in blue the 200-week moving average, and in yellow the 100-week moving average. You can see on today's bearish action below that 100-week moving average. When that has happened in the past, back in 2015 and 2016 and 2018, for the most part, it has signaled that we are likely to go down to true support on that 200-week moving average right around 2632. Could suggest more bearish action is ahead, Ritika, even if not immediately. It could come on more volatility.
Thanks, Abigail. I'm looking at gold versus treasuries, and today treasuries takes the title as the true safe haven. And usually gold rallies during these market sell-offs, but today it plunged by the most since 2013 on those margin calls. Meanwhile, treasuries have rallied with the yield on the 10-year down about 14 basis points. Now, this is reinforced when we look at ETFs. The GLD, which tracks gold, is down more than 4% on the week, whereas TLT, which tracks long-dated treasuries, is up more than 3% on the week. Renita?
Thanks, Ritika. Oil is continuing that slide on fears the coronavirus will hurt global demand. And this is also as WTI slid below $45 a barrel for the first time in about a year. Now, this quickly spreading coronavirus is spiraling global markets deeper into losses, as we all know. And WTI is down for the year. Financial services company R.J. O'Brien said if prices continue to slide in WTI, they could go down as low as $40 a barrel.
And how are Asian markets reacting to all of this? We have Annabelle Jewellers of Bloomberg News joining us right now. Annabelle, good morning. What are the updates here?
Good morning. Well, it really has been a reversal of fortunes in the last few minutes or so. So early this morning, we had the broader MSCI Asia Pacific Index building on its 7th straight day of losses. It's now turned positive. That's after we had an emergency statement out from the BOJ saying that it would maintain market stability, promising more stimulus into the markets. And because of that, we've seen a turnaround. So we've got the topics now reversing its earlier losses, trading 1% higher. China also coming online, the CSI 300 1.3% higher, the Hang Seng nearly 1% higher, 0.9% there. So I mentioned the BOJ. We also have other central banks opening the door to easing. So we, of course, spoke about the Fed, Jerome Powell opening the door to a cut on Friday. We also have Australia's central bank meeting tomorrow. So we have money markets now all but pricing in a cut of 25 basis points, expectations for a 50 basis point of 20%. So we're seeing Aussie bond yields slump to record lows on those bets. Back to you.
Thanks so much for that, Annabelle. But the global death toll from the coronavirus outbreak has crossed 3,000, with the infection now reaching over 65 countries. And Tom McKenzie of Bloomberg News brings us the latest in details.
So we're talking about 65 nations around the world now, and if you're looking for any bright spots, then here in China is potentially one of those, because we've had, again, a falling rate of infections. We've seen that now potentially over about 2 weeks. We saw 202 additional infections here in China for March the 1st. You did see an increase again in the death count. About 42 people died. That, of course, I don't want to downplay that, but in terms of the trend here, it continues to moderate in terms of the rate of infections. And we haven't seen, crucially, any outbreaks in other provinces. For the rest of the world, the focus, of course, is on the US, where you've got the states like Washington State declaring a state of emergency. You had that breaking news an hour or so ago about Santa Clara County in California, new cases being reported there. And we know that the US is going to be stepping up testing, so it's almost inevitable you're going to get more cases stateside as well. Here in Asia, of course, South Korea very much in focus. You've got almost 3,700 cases, more than 3,700 cases, 18 deaths reported in South Korea, and of course the US issuing additional travel warnings for travel from the US to places like Daegu in South Korea. Japan, of course, is an area of concern in Asia as well. And then in Europe, Italy, you saw an almost 50% increase in cases there. 1,700 now cases in Italy, more cases in Spain, the UK, but also other countries that hadn't reported cases coming through as well just in the last few hours, like Egypt and Algeria. So North Africa, the Middle East, a concern as well, with Iran being the hotspot there. And they've called out for a mass movement now to try and tackle it there. So it's very much a global issue now. The World Health Organization is saying they're not calling it a pandemic yet, but they are saying that the window to contain this is narrowing.
Tom, we are getting the Caixin PMI numbers out of China within the hour. What clues did we get from the official numbers out over the weekend?
Very ugly numbers, well below the forecast. 35.7 for manufacturing PMI for the month of February, from 50 back in January. It is the weakest number on record, and it's the official data, of course, the first set of official data that really factors in the coronavirus impact, and it has been pretty horrendous. Non-manufacturing, so services and construction, also the weakest print on record, 29.6. So what it means for growth here: people like Nomura, houses like Nomura and others, of course, PIMCO revising down their estimates for first quarter growth, almost contraction of 2.5% according to Nomura. And then the question is, does it rebound in the second half? Goldman Sachs thinks it will, but there are a lot of contingencies around that, whether or not, for example, companies can get back up to full capacity, and they're far from that at this stage.
The Organization of Petroleum Exporting Countries, or OPEC, along with the allies, are set to meet in Vienna this week to discuss further output curbs. This after prices suffered their worst weekly loss since 2008. James Thornhill of Bloomberg News tells us about what's on the agenda for the meeting.
The concern really is the global impact now. We've moved beyond China, and the headlines over the weekend with a 50% increase in cases in Italy, first deaths reported in the US, Australia, to name two of the countries that clearly the virus has spread to, and that is really the focus of the market. We had, as you mentioned, we had a very sharp drop at the start. It went down over 3% initially, but it's pretty much pulled that right back. What that's being pinned on is that, as you point out, there's the OPEC meeting this week, and hopes that these sharp falls that we've seen may sort of trigger a supply response from the OPEC members, Saudi Arabia being the lead candidate for that.
So just quickly, what are we expecting then from this OPEC meeting? Will there be a change?
Well, once again, it's a power play between the Saudis and Russia. And we had comments from Vladimir Putin at the weekend. It sounded sort of conciliatory to the line that the Saudis are obviously leading the push for a deeper cuts in oil. Russia is not so motivated. Generally speaking, their budget can withstand a lower oil price than the Saudi economy can, and that's why they've been reluctant so far to jump on board with deeper cuts. But Vladimir Putin did say he was open to discussing it at least, and certainly when you see the sort of price moves we have, then that will be focusing minds. And so, I mean, it remains to be seen whether it will be sanctioned later in this week. I think to a certain extent it's going to depend on how the market plays out in the first 2 or 3 days of the week heading into that meeting in Vienna. And of course, the other question is whether the meeting goes ahead at all. We've already had news over the weekend that the CERA Week, which is a really big industry gathering in Houston, that's been called off. And there has to be concerns about travel for in any part of Europe. So there's the question of whether what they do about that as well.
And now let's see what's making headlines across the globe. Sue Keenan of Bloomberg News brings us the first word headlines.
Russia, which says it is ready to cooperate with its OPEC Plus allies to support the oil market, even though it's comfortable with current prices. President Putin says the alliance of producers has established itself as an effective tool. He was speaking ahead of this week's meeting of OPEC Plus members in Vienna, where Saudi Arabia will push for new output curbs to meet falling global demand, in large part due to the spread of the virus. Meanwhile, police and demonstrators clashed yet again in Hong Kong on Sunday as anti-China protests erupted once again. Crowds gathered outside a police station in the Mong Kok area of Kowloon, with local media reporting police fired pepper spray and at least one officer drew a firearm. Train services at the local subway station were suspended after protesters set fire to one of its entrances. To Europe now, which is facing a new migration crisis after Turkey told millions of asylum seekers they can use its territory to escape Syria and other war-ravaged countries. Greece has invoked an EU emergency clause and is refusing to accept applications. Ankara says at least 76,000 people left Turkey on Sunday, although it is not clear if they crossed into Europe or remain at the border. Global news 24 hours a day, on air and on quick take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan, this is Bloomberg.
And now let's take a look at the trade setup for the day. We have Darshan Mehta who's joining us to give us an idea on the same. Darshan, there's been a slight bit of recovery in Asian indices. What can we expect today?
Yeah, so slight bit there, but the recovery on the SGX Nifty has been massive. It was up 8 points, almost 20 minutes ago. Now it's up almost 100 points. So there is traction that's there. So that probably will give some bit of respite to the bulls that will come in. So 100 points up on the SGX Nifty, but still this time and the way the Dow futures have been moving, it'll be anyone's guess how the SGX probably will be moving, because we are pretty much mirroring that, because it's not moving on fundamentals, we are moving on global cues. The other fact was the massive sell-off that we saw on Friday. 4% drop on all the indices, be it the mid cap, the small cap, or even the benchmark Nifty, almost 400 points down. On the bank Nifty also, they were selling, and the bank Nifty PSU that was down almost 5%. So across the board, they were selling, no one was spared. So there is enough traction that's happening. Now, if you're looking at what the ADRs would have done, Vedanta obviously saw a big sell-off. Metals have been in the eye of the storm. Tata Motors also reacting negatively to the 10% drop that we saw on Friday. ICICI Bank was down, Infosys, and it's been a while since IT has been participating now on the sell-off. So Infosys and Wipro, both of them were down in trade, and even in our markets, most of the IT stocks were down. Now, the flows, FIs were net sellers to the tune of 1,400 crores. DIs were net buyers to the tune of almost 7,600 crores. And the FI number obviously includes the block deal of Adani Gas, where Total bought in. So the number on a like-to-like basis will be much higher, and the sell-off is including the total deal that happened. Now, what happened in trade? Only two stocks managed to end with a positive bias, Indian Oil and ITC. But look at the sell-off that's happening in the big wigs: Reliance Industries, Infosys, HDFC, ICICI Bank, HDFC Bank, Kotak, all of them were down significantly, and there was no respite for our market. And similar was the trend. It was the first day of the new series and fresh short positions were taken. Open interest built up of 5%, and look at the discount in which the Nifty is going. So you could see this heavy selling that happened in the F&O market. So 52 points discount on the Nifty itself. Take a look at the Bank Nifty futures and look at the open interest build up of 25%, and now moved at almost 100-point discount to the spot. So it's very evident that there was heavy selling that was happening on the futures market on Friday. Now, as far as positions are being taken, again, now we are at the 11,200 mark in trade. Call writers are active from levels of 11,300 to higher levels. Put writers still have positions from 11,300 to 11,500, and if the market sell-off continues, there could be more selling that could come in. Now, what happened on Friday, and you could see that at higher level, put writers were forced to shed positions in open interest, and call writers became aggressive from 11,300 right up to 11,500. They've written at the 11,200 mark in trade. Probably we might see a little bit of covering that will unwinding that will come in, but overall it's the call writers that are active in trade, and you could see the PCR that would have come down massively given the fact that what happened on Friday. The VIX up 30%, no doubt, on such an important day when the market itself was down 4%. The VIX shot up by almost 30%. Now the PCR ratio moved from 1.37 straight to 1.1 because put writers were forced to shed, and call writers started adding in positions, and that's why it came down. Now, as far as stocks are concerned, Vedanta saw open interest build up of 47% on the short side, and all these stocks saw short positions that were being built. There was Mahanagar Gas, DV's Lab, Bajaj Auto, even the premium names were seeing fresh short positions that came in. In terms of open interest decline, Shriram Transport saw long unwinding, and all these counters again were down in trade, indicating that there was long unwinding happening on these counters.
All right, Darshan, thanks so much for getting us those updates. But, well, at least as far as the opening is concerned, there is a possibility of, well, a slight improvement coming through. But on that note, let's get in Soumit Sarkar to give us the stocks which are in focus on the back of news. Soumit, welcome back and good morning to you.
Good morning, Agam. I'll start off with Bharti Airtel. Now, they have said that they have paid an additional 8,400 crore rupees in relation to the AGR dues to the government based on their self-assessment. Now, earlier the company had deposited close to 10,000 crore rupees. Now, the company is also saying that they have complied with the Supreme Court judgment and directions on the AGR case. Now, two important cues from this announcement is firstly, the total amount that the company has paid related to this AGR case is nearly half of what they have provided for. And secondly, if this amount is lower for Bharti Airtel, which means that the amount for Vodafone Idea could well be also lower based on the new calculations. Secondly, Dr. Reddy's, because they have received a revised Form 483 from US FDA with one observation in place of two observations, which was intimated to the company earlier for its manufacturing plant 3 at Bachupalli, Hyderabad. Thirdly, PNC Infratech, because they have received a letter of award from NHAI valuing at close to 1,600 crore rupees for a project to build highway in the state of Uttar Pradesh on HAM model. Coal India, because the February production is up nearly 14% compared to last year, while their sales were up nearly 7% compared to last year. MOIL will also remain in focus because they have revised the prices of various types of manganese ores they have actually reduced the prices by nearly 5 to 10%. And lastly, Affle India, because they have acquired mobile advertising technology company Media Smart and another company for a cash consideration of 5.12 million euros. Now, in fresh listing IPOs, there is SBI Cards, because the IPO is opening today. The price band is fixed at 750 to 755. The issue size is close to 10,300 crore rupees. Now, of this, 500 crore rupees will be fresh issue, while the remaining will be offer for sale. And the post-issue market cap would be in the range of around 70,500 crore rupees. And also on the back of the monthly updates that have come in, Maruti total sales were down nearly 1.1% compared to last year, and were higher than the estimate numbers of around 1,46,000 for the month of February. Mahindra & Mahindra auto sales were down 42% compared to last year, and they were way below the estimates of around 47,000. Tata Motors sales were down 32% compared to last year and were also lower than the estimates. And lastly, Eicher Motors, where the VCV sales were down nearly 29% compared to last year to close to 4,586 units for the month of February.
Soumit, thank you so much for getting us those updates on, well, some of the stocks which will be in focus today. But shifting focus back to the Indian economy, it continues to remain sluggish. Compared to the revised figures for the second quarter, the pace of growth fell sharply in the third quarter, and it is estimated to slow for the fourth quarter. Pallavi Nahata reports.
Data for GDP growth was released on Friday. GDP grew by 4.7% in Q3 FY20. This was the lowest in 27 quarters. While this was in line with expectations, the revisions to growth rates in the previous quarters have complicated the growth outlook. This is because, as per the new estimates, GDP grew by 5.6% in Q1 and by 5.1% in Q2. Initial estimates in November had pegged GDP at 5% in Q1 and at 4.5% in Q2. The forecast for the full year remains unchanged at 5%. This is according to the second advanced estimates released along with the quarterly figures. Essentially, what this now means is that GDP growth may still fall further. This may largely be a statistical change because of a steep downward revision in GDP growth for FY19 to 6.1%. For the full financial year, nominal GDP growth is now estimated at 7.5%, which can be the lowest since 1976. Nominal GDP grew by 11% in the last financial year. Basically, now these figures need to be seen along with high-frequency indicators that have been showing signs of improvement, at least on a sequential basis. Moving to expenditure trends, revised figures indicate that investments contracted by 5.2% in Q3 after a contraction of 4.1% in Q2. Private consumption, which was thought to have nosedived to 3% in Q1, actually grew by 5% in Q1, stronger at 5.8% in Q2, and is now at 5.6% in Q3. Government expenditure has also witnessed a fall, coming in at 11.8% after a growth of 13.2% in the preceding quarter. Moving to industry trends, manufacturing and construction remained a drag on the economy. While manufacturing contracted by 0.2% after a contraction of 0.4% in Q2, construction grew by 0.3% after growing by 2.9% in Q2.
Retail fuel consumers like you and me may not get to enjoy the benefits of lower crude prices. While petrol and diesel prices are expected to move in tandem with crude prices, it's some of the other parameters that are spoiling the party. Nikunj Ohri reports.
A weaker rupee has shrunk the room to cut fuel prices, despite the fact that crude oil prices have declined and are even on a downward trajectory in future. The Brent crude prices have dropped by about 13.4% this week to $50.71 per barrel, which is the biggest weekly decline in almost 5 years. But fuel prices, in fact petrol prices in New Delhi, have been cut only by 5 paise this week to 71.96 rupees per litre. How this could be justified by the decline or depreciation in rupee, which has weakened by about 1.1% in the last 1 month to 72.15 rupees against the US dollar. According to the government study, if exchange rate changes by rupees 1 against the US dollar, crude oil import bill of India would change by about 2,729 crore rupees in Jan-March quarter itself, and this translates into an increase in India's import bill by over 10,900 crore rupees annually if exchange rate changes by a rupee against the US dollar. According to sector experts, one of the reasons that oil marketing companies have not cut fuel prices is that these companies may want to offset some of the additional margins to offset inventory losses that may arise or that these companies may suffer due to a fall in crude oil prices. Over to you.
Now, GST collections for the month of January crossed the 1 lakh crore mark for the 4th straight month. The government collected 1.05 lakh crore rupees for the month of January, as central GST were collected during the period stood at 20,569 crores, while SGST stood at 27,348 crores. IGST collected during the month was at 48,503 crores, while the compensation cess stood at 8,947 crores. Well, on that note, it's a wrap on this edition of All You Need to Know, but stay tuned to BloombergQuint for more news and updates.